Good evening, everyone, and sorry for this delay because of some exigencies. My name is Rahul Shukla. I am Assistant Vice President Finance, and joining us for today's meeting are our management team here, and we have our Vice Chairman, Mr. Arjun Dhawan, and our CFO, Mr. Rinesh Concall, would also be joining shortly. We welcome you all in this Q4 FY'24 presentation, and I'll just take you through the summary of this presentation. So, just to give you a snapshot, with 100-year-old legacy, HCC has completed more than 4,000 kilometers of highways, almost 400 kilometers of complex tunneling. We have been part of almost 60% of India's nuclear capacity and 26% of installed hydropower capacity. We have got a nationwide footprint with almost 30 projects all across various states of the country, including overseas, which is Bhutan, and we have done quite well over there as well. As of 31st March 2024, our order backlog is 10,475 crores, which is well diversified across various sectors, with transport leading the show, followed by hydro and water. And the diversification also spans across various states, so with Uttarakhand and Maharashtra leading the pie. So key performance highlights for Q4. As you can see, we have achieved a consolidated revenue of 1,773 crores, which is lower in comparison to last year, which was 2,426 crore. This is essentially on account of sale of Steiner construction business, which we had updated earlier as well. Our consolidated net profit stands at 246 crores, which is more than previous years, Q4, by almost 22%. Again, because of some gains on account of Steiner construction sale. Our standalone turnover is slightly down. I mean, it's at 1,428 crore, is against 1,845 crores last year. Obviously, we were expecting much better performance. Had a couple of projects not seen some unforeseen things, which are now sorted. Those were temporary hiccups. So we see that going forward, there will be some improvement over here. Standalone net profit is 38.8 crore, which again is down in comparison to last year, obviously due to a reduction in our turnover. EBITDA margin is improved, which is 15%. So there has been a very good outcome in one of the hydro projects, wherein there have been some reduction in financial liabilities because of our settlement and agreement with client, which has resulted in improved EBITDA margin. We have completed our Nikachu project in Bhutan in the month of March, for which taking over certificate has been received. We have been, I mean, nothing to be proud of, but we have been consistently paying all our lender dues. And in March, we have paid 340 crores. And nothing is due or outstanding to lender at any point in time in last. And we have also, as you know, we had updated you that we are embarking on a rights issue. And we are proud to inform you that we have successfully completed 350 crores of rights issue, which was oversubscribed by 250%. So we received application for more than 800 crores for this issue, which obviously shows the confidence of investor community on the company, our performance in the results that we have issued. On the business development front also, we have been the lowest bidder for 4,500 crores worth of project, for which we can expect LOA to be issued very soon. Our bid pipeline is very strong. 10,400 crores worth of bids are under evaluation. And additionally, almost 46,000 crores of the project have already identified for bidding purposes, which will be fueling to our growth going forward. Just a graphical representation of our performance. You can see that we have been consistent more or less in terms of revenue, EBITDA, PAT, and EBITDA margins. Year-on-year basis also, just a graphical depiction which shows that performance is consistent even in the medium to long term. Coming to operations update, Mumbai Coastal Road project, which you must have seen in the newspaper media also, we have achieved some significant milestones, wherein we have put in this arch structure in place, couple of arch structures. Every structure is almost 140 meter in length and 2,600 metric ton in weight. And in fact, the second one was put in place even when the seas were not very supportive. There was some cyclone a couple of days back. But it shows the tremendous skill and capability that company has got in terms of executing complex projects. So we have successfully achieved this, one of the first icons in India. Nikachu, as I already updated, we have received taking over certificate. In NS34 also, we have achieved final commercial operation for the last almost 10-kilometer stretch. So this completes the project from all the aspects. Anjikat bridge is almost completed, apart from some minor slope stabilization and miscellaneous works which are there, which are going to be completed very shortly. T49 tunnel, again, all major works completed. Some variations are there which are under progress. Numaligarh Jorhat, this again almost completed project, and some utility and miscellaneous works are in progress. So the point here is the purpose of showing this, all this is that there has been considerable progress and delivery of all these projects which had been there for a long time, but for last 2 to 3 years, the way we have executed them and delivered to the client, this has generated tremendous amount of equity with our clients as well. Coming to other projects, Vishnugad, Tehri, these are our hydro projects in Uttarakhand. And they have also been going quite well. Especially in Tehri, we have achieved one of the milestone by lowering 250 megawatt rotor to the generator pit. In Vishnugad, our tunnel boring machine, which had faced some problem, which is also one of the reasons from slightly lower revenue, because once TBM starts, our revenue generation is quite fast. So but now this is on track and it is working fine. Mumbai Metro line also doing quite well. So our CST station is almost complete, and other station at Kalba, Devi, Girgaon, and Grant Road are also progressing quite well. Now coming to financials, I have already explained key financials in the previous slide, so I'll not be dwelling upon it. You can have a quick look at it, then we will move on to the next slide. First, consolidated numbers for quarter. Consolidated number for the full financial year. Now coming to Steiner, we just wanted to give you a little better view this time. Last time also we had explained a little bit about our business reorganization that was going on, and the fact that we had carved out construction business of Steiner based into another subsidiary. So just to give you a complete overview. So Steiner AG business comprises of construction business and real estate development business. And obviously company wanted to monetize this business and generate capital for shareholders. In that process, in FY'24, we had carved out Switzerland-based construction business into a separate company. And this company was sold to Demat-Chuba, who is a French construction contractor. That particular business, in terms of financials, was generating almost 300 millions of revenue with a very small profit margin of almost 2%. Transaction was at a 19 million Swiss franc, and along with its liability of almost 60 million. Now, after that sale, the business is now left with Construction East, which we are winding now, and the real estate development business. So real estate development business is the one which strategically we have been focusing because it's a very large portfolio that we have, along with good PAT margins that are there. Very stable business, takes some time to develop, but once it comes to that level, it's a very good business pipeline that we have. So as of now, Steiner pipeline that is there comprises of almost 65-70 projects. But we are in the process of transferring 57 projects to a new company, which will have a portfolio of 5.5 billion comprising of these 57 projects. As an estimate, we can expect that this will give a turnover of 300 million per annum, with maybe PAT margin of around 5%. To monetize this, we have already appointed an investment banker who is running this process. Rail is a well-known investment banker. And the goal is, so basically with this helps in bifurcation of real estate development business from the construction business, which had its own legacy issues, and makes this investment much more lucrative and potentially will help us accelerating the process of capital. Coming to the next slide. These are some of the ongoing R&D projects. Just to give you a sense, there are multiple such projects. As I mentioned, there the 57 projects we are transferring to another entity. You can see that these are residential, commercial, mixed use, all marquee projects, which once reach advanced stage have got tremendous value. Here are financial snapshot. You can see that the 31st March 2024 order backlog is 425 million Swiss franc, which translates to almost 4,000 crores of Indian rupees. Turnover for FY'24 was 123 million Swiss franc, translating to 1,679 crores. And profit before tax was 24 million Swiss franc, equivalent to 220 crore rupees. And obviously, this excludes discontinued operation of Steiner Construction, which we have already sold. So, yeah. So this ends our today's presentation, and floor is now open for question and answer. So you can raise your hands and we'll take your question.
Sanjeev Damani, you may please start. Sanjeev, you may please start.
Hello, am I audible?
Yeah, now you are audible.
Oh, so kind of you, sir. Sir, namaskar. Congratulations for company being brought to a level where we are now doing new biddings also. So, sir, one thing I want to understand, we are lowest bidder in 4,600 crores worth of project. So, can I know the nature of such projects that we have we are at the lowest and likely to get them? Can I know, sir?
So yeah, Sanjeev. So as you know that we have got a diversified portfolio, essentially in transport, hydro, nuclear, and water. So these projects that we have, we are L1 on, essentially are from transport and hydro sector.
Okay. Okay, transport and hydro. Now coming to second one, that we have repaid some 350 crores worth of loan, was mentioned in the presentation. So would just like to understand, sir, that it is the right money, rights money that has been paid back, or this amount was paid earlier, and this right money will be used as working capital in the company.
So this amount was paid earlier, Sanjeev. As you know that before 31st March, we make all those payments to lenders. So that's what we have already done before rights issue money actually hit our account.
Okay.
So this has not been paid from rights issue.
Okay. So now, sir, we are on the completion of largely, each and every project which we were in hand. Can I just know the amount of pending execution, likely amount of sales to be derived from pending execution, and some other projects which are already going on? So in next 6 months, how much we are estimating our turnover to be, billing to be to the customers?
So Sanjeev, we cannot really give you an estimate of future turnover because that will tantamount to futuristic statement.
Okay.
However, we have already disclosed you our order book, and from that you can make your own estimate because we have been consistently performing at certain rate. So you can basically will have to work out your own number.
Can you just quantify the pending orders as on hand, which are executable straight away, which are
Yeah, so
ongoing?
sure. So we have order backlog of 10,475 crores, and
Okay.
all of this is executable.
As on 31st March.
Correct.
Right, sir. And we have not won any new order in last year or in this current year so far.
So as I mentioned, the L1 positions,
Right.
that's what we have. Last year, we have not received any letter of awards. We have just been L1 in this 4,400 crores worth of order, and
Right, sir.
this will subsequently be converted into awards.
And if I can just know the the amount that we transferred to a separate company, SPV, for settlement with our lenders, some progress is there on that account?
Progress in the sense, sorry, can you
In
be
the
more?
sense that if we have realized the money and bankers have been paid, we had pending awards from government.
Yeah. So we have certainly realized some money. However, lender due payment starts after 2 years.
Okay.
So we will take a judicious call whether to make some prepayments to them or keep it as a reserve for operating expenses of that company. Because
Okay.
for realizing money from those claims and awards also we have to incur expenses.
Okay.
So,
Okay. Okay.
but that decision will
Okay.
be taken by management at
Okay.
an appropriate time.
And sir, finally, have we also got any additional award thereafter? Whatever we transferred to that company, thereafter, have we received any award in our favor for our pending litigation or claims?
Yes, yes, we did receive because it's a continuous process. So HCC continues to have significant amount of claims, historical claims, because we did not transfer everything to that SPV. So those claims keep on converting into awards as and when the time comes. As and when the arbitration process is complete.
Thank you very much, sir. You people are very, very cooperative and you make us understand the business of the company very nicely. Thank you very much, sir. Thank you.
Thank you, Sanjeev. Thank you. Appreciate it.
Hello.
Yad hai. Please continue with the.
Sir, I had a couple of questions. The first question is on the debt side. How much debt will we pay in FY'25?
So in FY'25, we will be paying almost 430 crores, 425 to 430 crores. Debt. This will not be entirely principal, but will also include yield. So this I'm telling about total payment that we have to make.
So, what would be the principal amount in this 430 crores?
So principal will be almost slightly above 200 crores, maybe around 220 to 30 crores.
Correct, sir. Also, I wanted to understand in this particular quarter, our subcontracting cost is a little on the higher side. What is the nature of this cost and any specific reason of such a high subcontracting cost?
Just a second. Yeah, so basically, you are comparing it with last quarter, or what are you comparing it with?
So I am comparing it as a percentage of revenue compared to last quarter as well as year on year,
Okay.
as a percentage of revenue, that is.
So on a year-on-year basis, if you see that this is in absolute number terms, it is lower.
Correct.
Last year, in the last quarter, Q4, we had almost 1159 crores of subcontracting expenses. This year, it's around 770 crores. It is lower. Ratio-wise, yes, you can say it can be slightly higher. As I mentioned that we were expecting, couple of projects to perform much better, should have generated much better turnover, but which got actually postponed to the next periods. So the ratio is slightly that way. I would not say is comparable, but it is in line only. It's not too off.
Correct. Also, sir, I just wanted to understand this, that when I compare this subcontracting cost as a percentage of revenue, and I'm talking about the on the console basis, can I get a particular percentage or something? Any broad range would do.
So you can see around 60 odd percentage is the ratio that subcontracting cost comprises, but it can vary quarter to quarter. It cannot be a straight line.
Correct, correct. So that is for sure. Also, sir, I wanted to understand this on the bidding that we do. The rights issue money that so currently, if I consider the rights issue money that we have got, we are a net debt free company, right? I mean a network positive company, right? So how is the bidding going to take place? Will we be allowed to bid as a network positive company uh, starting from today, or we will have to file an audited annual report or something kind of that to get into the biddings of this
I get your
company?
question. Hey, I will answer this question, but I think we will have to limit our questions because others are also raising hands. So
Sure, sure, sir.
need
This
to
is the last
respect-
question. If you could answer.
Sure.
No, Rahul, I'll answer this question. Girish Gangal this side. Our network
Yes,
was
sir.
positive last year also, and it is positive this year also. Last year it was 700 plus, this year it is 900 plus. So there is no difference in bidding as far as last year is concerned or this year is concerned. We are always have a positive network for last 2-3 years.
And we did
Sir,
not
on the
restriction on bidding there because, as I said, that every quarter we have been showing that our bid pipeline and bid under evaluation is this much and all. So we always, for last many quarters, we have been bidding, and now we have also started seeing the results.
correct, sir. I'll fall back into. Thank you.
Thank you.
Mahesh Vijay, can you please start?
Yeah, hi. So my first question is on typically between being L1 and getting letter, what is the kind of time gap that one looks at?
So Mahesh, it depends from client to client, project to project, obviously, but generally we can expect maybe 1.5 to 2 months on an average.
Okay. And are there any cases ever where you are L1 but you don't get the letter?
No, it doesn't really happen unless bid itself has been cancelled. So in our case, we have not really seen this kind of situation.
Secondly, this 10,000 crore odd number, which is under consideration, it essentially means I'm just trying to understand it. It means that we have submitted the bids, but the client has not yet informed who is L1, etc.
So bids have not yet been opened. That's correct.
Okay. And one last thing, there is some tax, meaning I went through the notes, I could not understand. If Mr. Gangal could explain why the tax liability is so big, especially on the deferred tax side.
Yeah, sure, Mahesh. See, if you see current year, we had a substantial profit, correct?
Yeah.
So since we have a substantial profit, there are two counts. One, there is a current tax provision, okay? which you have to make on, because we are making a profit this year, one, which is on the book profit taxation basis, which is popularly known as MAT. At the same time, we have brought forward losses for past. Okay, so while computing regular computation, we get a credit for those brought forward losses. So whenever we use these brought forward losses, to that extent, deferred tax asset earlier computed on these brought forward losses gets consumed. So there is a creation of deferred tax liability in a way. So that's why there is a tax provision higher than what you find last year.
Right. But shouldn't, meaning, shouldn't net it should be just about, not last year, the absolute tax rate, shouldn't it be at the corporate tax rate level? It seems to be a bit higher.
No. See, it is, Mahesh, it is like that. It is a little complicated thing, but I'll still try to explain. There are two methods of taxation. One is a regular taxation, a normal taxation, wherein you get all the advantages, deduction, brought forward losses, set off, etc., and you arrive at a taxable profit. And parallelly, you have to also compute tax payable on your book profit without deducting anything except book losses. Correct?
Okay.
Now you will see last year also we have made a profit. So there are very little book losses what we have. So on one count, on the regular competition, we could set off the losses. So the tax payable under regular competition is 0. But since on book profit or a MAT competition, there is a tax liability, you have to choose whichever is higher. That is the income tax provision. Okay, so either you pay on regular or you pay on MAT. Whichever is higher, you have to pay the tax. So because of that, there is a tax provision this year.
Okay. So, but is there any extraordinary component to this, or it will continue like?
No, it will not continue like this. See, it depends on the book profit taxation what you have and how you are going to have your taxation carried forward. So suppose since this year we have made a profit, in case we have a book profit taxation next year, there will be a normal current tax provision as well as reversal of deferred tax provision on consumption of losses.
Okay. And one last thing, sir, in this financial year, our balance sheet has undergone significant restructuring, churning, whatever you can call it. So if you could give some approximate guidance on next year's, for the full year, what the interest cost will look like. For the full year, I just want some range, because there are costs that are there in this year's P&L, which obviously since then our balance sheet has undergone some transformation.
Correct. No, frankly, this year I don't see there is a major transformation in standalone accounts. If you see the balance sheet, the transformation has happened last year where we have went into a restructuring of the loans and or this arbitration awards, etc. This year there is no major transformation. The interest cost will remain more or less at same level what we have, because we have a bullet payment to be made under resolution plan. So whatever is the principal repayment happens, to that extent interest cost goes down. But at the same time, the existing interest which is accrued but not paid, it gets cumulatively computed. It gets compounded. So more or less we'll have a similar level of interest what you are seeing in current balance sheet. More than that, I can't make any forward-looking statement as such.
Okay, fine. Thanks a lot.
Yeah.
Thank you.
Yeah.
All the best.
Yeah, Viraj, please put your question.
Viraj, can you hear?
Oh, hi, can you hear me?
Yeah. Go ahead.
Sorry for that. The 10,000 crore order book that you currently have, on top of that, the 4,500 crore L1 order book, assuming it all comes in as orders, over what period would these be executable to translate into revenues?
Yeah, see, generally, it depends on each contract. Either it has to be completed within 36 to 48 or 60 months. It depends on each contract, depending on what type of contract it is. So on an average, you can say 3 to 4 years. The new orders, what I mean.
Right. And the slide that you showed in the presentation regarding the Steiner remaining business, which is roughly 150 crore PAT business with a large order book, I wasn't clear. So you've appointed an investment bank for a fundraise there or for outright sale?
So let me take that question. We can't comment further. We are believing that ambiguity at this point in time. I think it's as we pointed out to you before. We will basically look at alternatives for unlocking a value in Steiner. Part of the reason we're raising capital is also for the growth of the R&D business. There will be some capital to actually accelerate growth there. Some of the monies will be used to take care of past liabilities of the construction east business that we wound down. And certainly, obviously, I think that assuming how the process basically goes, we will keep you updated with regard to how we're thinking about a return of capital to HCC if that is appropriate.
Okay, understood. And lastly, why would interest costs remain the same in next year at 800 odd crores, given the restructuring of the balance sheet and some monetizations happened this year? Would the principal amount not be reduced and reduce the interest cost next year?
I think I have answered this question to the earlier, Mr. Mahesh was see what happens. Interest cost is first of all 663 in this standalone balance sheet. It's not 800.
Yeah, I'm talking about consolidated. Sorry.
Consolidated. Okay.
Yeah.
So in consolidated also the majority cost comes from the SCC. Okay. So what happens that whatever repayment happens. Okay, repayment happens in a staggered manner, which is to be paid over a period of 5-6 years. So every year the repayment, principal repayment happens maybe 10-15% of the original principal amount, and balance is the interest. So when interest is getting paid and principal is also getting paid, so there is some reduction in interest on account of repayment of principal.
Right.
But interest accrues at compounding rate. So whatever is the balance loan as well as interest, there is a compounding on this interest. So naturally that increases the cost. So it's a balance between reduction in interest on account of principal repayment plus addition on account of cumulative or compounding of interest cost. That's why this interest will remain more or less same. It requires a calculation. Rather, I am just making a statement that it will be more or less same.
Understood. Thank you.
Yeah. Kenil Mehta, you may please start.
My voice coming?
Yeah.
Sir, would like to know you had won one contract for Agandanda Creek Breach. Contract worth 1200 crores. So is that contract going to materialize in coming months? And also my second question is, based on MSRDC has put server tenders for expressway project in Maharashtra, but based on the public documents, I see majority of our projects we are not the L1 bidders. So would like to know whether we have included that projects in our bids and the evaluation process, or it's separately filed.
Let me comment on the second question. We are involved basically in this particular corridor, and I think that's all I'll say at this point in time. We will basically communicate at the appropriate time how we're executing part of this project, and if so. Regarding your question on Agardanda, I think that had already been addressed earlier. The project is L1. I think that we should probably expect the speed of conversion, to be fairly quick, given the track record of the MSRDC.
Understood. And also, sir, would like to know your view on the pump storage projects across the country, as various public sector companies are announcing in the press release, power companies. So would like to know what will be the timeline and on what will be the base order size for each and every company? Hello.
Rahul, do you want to take that, or do you want me to continue to answer?
So sorry, Kenil, I missed your question. If you can please repeat it.
Would like to know what will be the opportunity size for the pump storage projects, and what is the viewpoint on that sector as a whole, and what will be the minimum order size and timeline for completing the projects?
Sure. So pump storage schemes are obviously a strategic requirement of the country, because they help meeting peak power requirement. So there is very clear pipeline of these projects which are coming. And HCC has got very strong track record. We are just executing our Tehri pump storage scheme, which is 1,000 megawatts. So we are very well placed over there. In terms of size of those projects, we can expect each projects to be around maybe 800 to 1,000 megawatt size. As I understand, around 8 to 12 projects are there in the pipeline, which we can expect in coming years. So we are there to bid for that.
And what will be the timeline for completing a 800 or 1,000 megawatt project?
So pump storage schemes are relatively simpler than typical hydro project because it doesn't require a very heavy dam. We just have to create a small dam to pump water back to the original dam, and from there it is pumped down and power is generated during peak hour. So typically the timeline can vary, say around on an average almost 4 years of construction timeline, depending on what kind of geographical location the scheme is located. Because we are expecting that these schemes will not be in a very, very difficult kind of locations. There are hydro projects which are in a relatively easier geographies. There are also these pump storage schemes are being planned. So we can estimate a timeline of completion of almost 4 years.
Understood. Can I ask one more question?
Yeah, sure.
One final question, sir. As we industrialize, again, the power sector is after a decade, it's starting to gain its strength based on new orders for nuclear and pump storage and thermal. So should we expect going forward the power order book will be higher than our transport order book in coming years or quarters as various company finalizes their order for nuclear
Okay,
and
we would not like to comment whether it will be higher than transport or not because India's infrastructure sector is so big that there are orders and projects in every sector. And transport is obviously commanding very big chunk of those order books. So there's no point in commenting that. We should rather be contented with the fact that we should be able to book good and profitable orders in whatever sector we see the opportunity.
But Rahul, if I may just add, I think that if you look at our track record historically, we've actually had our hydro contribute anywhere between a quarter to a third of our order book. Now, if you look at that historical track record, I think it would be fair to say that we would probably expect that to continue. We might see, depending on a wave of hydro projects coming at some point in time, we might see those percentages shift. And mathematically, we could expect that considering that we are at a lower point at our order book cycle. So we expect a very, very strong growth in the next couple of years on the booking of new jobs. And if we happen to bag a couple of large power projects in the short run, you might see a distortion on that. But I think in the long run, I think it would be fair to say that we would actually probably still maintain that sort of historical track record, more or less.
Thank you, sir, and thanks for walking the talk over last many quarters.
Can I add something here, Mr. Dhawan?
Oh, please, by all means, Mr. Subramanian.
Yeah. So, Kenil, we have a very good track of delivery on hydro projects, and pump station is also a very similar project. So right now, just wanted to inform you as you've asked, we are delivering 1,000 megawatt, large one, which is going to be commissioned within this financial year. And this is the first variable speed turbine pump station project. So we are there as one of the first ones who are delivering these sort of projects. And this is going to be delivered this year. So I'm pretty sure that we'll get some good traction with the segment again coming into picture in a larger way.
Thanks a lot, and thanks for walking the talk over last many quarters, sir. Hope the future will be better than earlier.
Thank you, Kenil. Shyam Garg, you may please start. Shyam, are you there? Shyam Garg.
Hello, am I audible?
Yes, go ahead.
So most of the questions are answered. The only question I'm left is with what is the conversion ratio of the orders we bid for?
What is the conversion ratio of?
Orders we bid for.
Okay, so historically, if you see, we had a conversion ratio of 15 to 20%. It varies from sector to sector, but this is an average number that I am telling. But it also depends on what is approach that we are taking. For example, if we talk about recent 2-3 quarters, our conversion ratio is much higher than 15-20%. So obviously, with the good orders being there in the market, which we want to take and we can take, then the conversion ratio will continue to be higher, maybe 25-30%. But once we have booked our required orders and we see that now the orders which are there are not really, they are run-of-the-mill kind of road projects and all that, probably we will be very selective and we will not be very aggressive in taking those orders. So it all depends on how we plan our game.
So is it right to estimate that from the order book of 10,000, which is in pipeline, and 45, which I have identified, we will be able to get order of somewhere around 12,000 odd crores?
Yes, you are right in your
Okay.
assessment. It could be even higher than that, slightly higher than that.
And this could be rewarded in FY'25, or it could be few of them maybe or roll out in FY'26 as well.
So we certainly target that, but many times it also depends how fast client proceeds with the process of awarding those orders. So when we are planning our bidding estimates, bidding budgets and all that, we certainly look at timeline of 1 year. So for us, window is FY'25 unless it gets delayed from client side.
Okay, so that's it from my side. Thank you for answering my question and all the very best.
Thank you, Sham. There are no more hands. So, Rahul, we
Yeah.
can end it.
Thank you everyone for participating in this investor meet, and we look forward for your continued support and encouragement. And I thank HCC management for being here and supporting. And with this, we close this today's meeting and look forward to connect with you in the next quarter. Thank you so much.
Thank you.